Hi everyone, today is Wednesday, so you know what that means. Episode 2 of Insta-Asks Real Estate with Elson. I'll be answering the question HDB loan or bank loan if you want to go for a HDB project. Okay, so as usual, let's break it down to 3 main easy points for you guys to understand so you have a better understanding of HDB loan or bank loan. Let's go.
So hi everyone, welcome back to my poor man's iPad. I'll be sharing with you guys the 3 main points when it comes to looking out for a bank loan or a HDB loan. Okay, when you want to buy either a BTO or a resale HDB. Okay, so the first thing that I want to talk about is actually interest rate. So right now, bank interest rate is actually 1.3%. Okay, on average I was looking around and actually this is the current average for bank interest rate now. It's actually 1.3%, which is pretty low because of some government policies. They push down the interest rate in order to make borrowing cheaper for people who want to take out loan for their housing or whatsoever. Okay, so it's actually 1.3%. But this 1.3% even for fixed rates, right, it's usually only valid for 2 to 3 years before the bank can actually change it. Okay, so what about for HDB? HDB interest rate right now is actually 2.6%. Okay, it's usually pegged at 0.1% above your CPF OA account interest rate. Okay, which is actually 2.5%. Basic math. Quick maths. So this is actually the difference rate between between bank and HDB. So which one is actually cheaper to borrow right now? It is the bank. Okay, so second thing that I want to talk about, which is quite important as well, is actually the LTV, which is the loan to value ratio. So this actually determines how much you can borrow. Okay, let's say you want to borrow to buy a $1 million HDB. Okay, this HDB is valued at $1 million lah. I use $1 million to make it simple for you all to understand. Okay, so for a $1 million HDB, you want to borrow from the bank. The LTV is actually 75%. Okay, maximum. In some cases it can be lower. Okay, but it depends on your criteria, and the highest one is 75%. Okay, so this means you can actually only borrow $750,000 when you want to buy a $1 million HDB. So what about for HDB? HDB you actually can borrow up to 90% of the valuation, which is what? $900,000. Okay, so which one you can borrow more? HDB, definitely. Okay, so some of you might be wondering, okay, so I can use the bank to pay 75%, I can use HDB to pay for 90%. What about the remaining amount? Well, the remaining amount is also the last thing that I want to talk about, which is actually the down payment. So for down payment, bank, you have to pay 25%. Okay, and this 25%, 5% must be cash. Must be cash, okay? And the remaining 20% can be cash or CPF. Okay, so what about HDB? HDB, the remaining 10% how? Okay, the 10% can actually be fully paid using your CPF. Or if you're self-employed, you don't have enough money in your CPF, you can fully pay using cash. Okay, so actually for down payment, right, usually people who don't want to touch their cash, they go for HDB loan because everything can be paid using CPF. Okay, so I know again this might be a little bit different from my life. Okay, I didn't really talk about early repayment, late repayment, blah blah blah, all this kind of thing. Okay, because I don't want to confuse you guys any further. This is meant to be short and sweet for you guys to understand the main points when it comes to borrowing. Okay, and I think that these 3 are actually the most important points that people think about when you want to take a loan, whether from bank or HDB. If you have any other questions, feel free to contact me.
Right, so that's it for today guys. Thanks so much for tuning in. As usual, if you have any other questions, please feel free to let me know. And have a safe week ahead. Don't get COVID.